I'm
Thanks, guys.
excited.
74, stand by.
Guys, always. But we're going to wrap.
Money in the bank.
Rates are good.
Rates are good, he says.
Rates
Good.
Free money.
Welcome back to the program. This is your real estate Chalk Talk with the Hittner Group. 612-627-8000 is the number. HittnerGroup.com is the website. I was reading an article about actually a press release from the American Bankers Association, and they were saying on average, they're talking about the profitability per loan, that they're losing about just a little over $500 per loan origination is what the loss is on a loan. I mean, everybody's losing money. And they were actually celebrating it because it's down from $2,500 per loan. So, bleeding, how can you be losing all this money when the rates are at 20, 30-year highs?
Well, the rates aren't reflective of profit margin, right?
Okay.
So the rates are reflective of what's happening in the economy and with the Fed. So we are, I mean, that is a true statement.
Yeah.
We are making less money now than we've ever made, and rates are, if you're not paying a bunch in points and doing things, and we do things, but I mean, an honest rate is between probably 8 and 8.5 right now. Everybody will lie and tell you it's not, but that's where that is. It's between 8 and 8.5 based on credit, loan to value, all the things that come into play. But it's the profit margin is very small. That's why, I mean, quite honestly, being at Loan Depot has been a blessing. Largest retailer in the country. Every company I've worked for, and I've been doing this 21 years, is now a different name or out of business. So that's crazy to think, right? How long we've worked together. And just like, my goodness, that's sobering, right? And then you talk to my bosses and they're like, let's go 3-4 more months of this. We'll lose another 20 to 30% of the companies in the industry, and that's good. They see it just as this great opportunity to recruit good originators, to get market share, because at some point, and we'll argue for the next 8 minutes on when that will happen, but get the weak out, and the stronger will survive. And then when the market turns, there's going to be great opportunity again. I started with rates. Rates today are higher than when I started in the business. And I ran a 20-year career with rates going down. Wonderful. Now, literally in 6 months, they jumped to the highest level ever that I've experienced. So now I'm like, okay, I got one more run. And so it's just, though, right now it's the survival and getting people in. And then the conversation we had at coffee this morning was, it's not that bad.
No.
It's not that bad. So people need to kind of relax a little bit and go, it's not that bad, folks.
Well, if you look let's talk about the conversation we had. We just, as an example, this is real life, someone that we're working with right now, looking at buying a $250,000 townhome and wondering if he should wait a couple of years until rates come down. All right. Well, that's a thought, but now think about this. You're going to pay rent for 2 years. Is there any tax advantage or are you gaining equity or anything in that?
No.
Not a nickel. If you buy your $250,000 townhome right now at normal appreciation, in 2 years it's going to be worth $275,000. So you're going to make $25,000 in equity gain on that townhome. The differential, the delta between what do you think is a good rate then? Well, I'd like to see 5.5. Okay, so the delta between 5.5 and 8.5 is about $6,000 a year.
Yeah, it's $478. We figured it out.
A month.
Yep.
So it's under $6,000 a year. All right, so now over 2 years, that's $12,000 additional interest that you paid, but you've made $25,000 in equity gain, and it's deductible. So it's really $4,000 a year. So it's really $8,000 additional investment that you've had, but you've picked up this $25,000. If you wait now 2 years and buy that in 2 years
at $275,
at $275,
at 5.5, you know what I mean?
Yeah.
The number.
So it doesn't make. If you just look at the arithmetic, I mean, even a moron can see that it's not a good decision to wait. Like any investment, they always say get in early. Today is early.
Yeah.
Today is the day.
And one of the things we talked about is what we're doing right now is we will do everybody's paying, like, it used to be a 1% origination fee and like standard. Then it was like nobody paid it at all. Now everybody pays at least a one.
Right.
It's not an origination fee; it's a discount
Call
point.
it something else.
We drop, so it drops the rate down to like $7.99, and then we're giving a 1-0 buy down, which means you start 1% under. So now I'm at $6.99. So now that conversation with Tom's son is, hey, rates are between 8.5. I can get you going at 6.99.
Mm-hmm.
And then when we did that same scenario, you're talking about the difference in that payment, $230.
Okay.
So now we're down to 200. Now it's $230 difference, and we know rates will come down, right? We know that will occur. We're coming into an election year. Is it going to be some tough sledding for a little bit? Probably. Are there still deals to be done? Absolutely. I mean, we're still relatively busy.
Right.
Right.
Life still goes on.
Life's happening, and so it's not horrible. So don't like. People hear the stuff and then like, I think I'm just going to wait. I'm going to do that. And then when you run the numbers, they're like, oh, it's not that bad. And we can do creative things. That's also though why, we're losing $500 a deal because we're discounting everything we can because we just want to get people in because quite honestly, I know that if Tom's a client now, when refinance, we have a lifetime guarantee, right? So no lender fees, no appraisal fee when they refinance. Wonderful. Now he's coming back. So anything we can do just to build up that right now, we're doing. So.
And our people are going to have to maybe give up their $8 cup of coffee every day, or their second one, or their third one.
Well, you guys have to.
Yeah. I mean, that's.
Where'd you get yours?
My house.
Yeah, but you paid $50 for that Yeti cup.
No, this was free.
Oh, was it? Oh, it was free. Yeah, it probably worked in the price of my flooring.
Yeah, exactly. Well, yeah, I charged you for it.
What else is going on in the market? What about Israel and the wars? I mean, you got wars, breaking up all over. How that's going to drive rates down, isn't it?
Yep, sure should.
Nothing. It brought it down a little bit, but here's one of the headlines, right? So I'll just read you some of the headlines. Relentless surge in mortgage rates. Mortgage rates inch higher into the 8s. Existing home sales slide to 13-year lows. Buying opportunity, the one positive. Mortgage rates ease over 8 as the economy refuses to cool. So the Fed won't signal an end to its higher for longer rate policy, and that's the issue driving even more. We were at our renovation loan deal where we had Barry Habib, who's one of the leading experts in real estate mortgage, where rates are going, and he even said, hey, we hate what's going on in Israel, but it should drive rates lower. Rates went up this week again. Now, so the economy is strong based on how it's being measured by the administration in power. Right. So rates went up again, but that was driven by something other than Israel, obviously.
No, it wasn't driven by Israel. No, it's just there's some more economic reports that came out.
What is the reaction? And what does the market react to anymore that's predictable that you can say, oh yeah, that's probably what's going to happen.
We don't know. We were dealing with 2 days ago a 200-day moving average, and they said, hey, this is the resistance line. So they all these charts have nobody cares about this stuff, but there's these lines, and like, okay, there's resistance. It usually bounces. And they said if it breaks 3, it's kind of a free fall. It broke through that line, and now they're just like, hey, we're kind of in free fall territory. So we'll see what happens with rates. We recommend locking as soon as you get it. And if the market improves, we'll lower it.
Okay.
So there's not a lot of great guidance on that other than when you're ready, lock the rate. We'll do things on our end to get you as low as possible. That's about it.
So even the buy down, which will give you some relief today on your payment, you still need to qualify for that higher rate.
Yeah, you qualify at the 7.99 rate, let's say, versus the 6.99.
So for people who are having a difficult time qualifying, they're going to have to make some decisions about maybe size or some amenities or some things that, the days of being able to buy a $600,000 house for a $400,000 house payment are over.
Right. We had one that they wanted between $300,000 and $350,000, and by the time, and they wanted to use some down payment assistance. Well, there's all these rules with down payment assistance. There's all these rules. You know what they ended up qualifying for with all the new rates and that $175,000. They're like, really? That's all yeah, because if you use down payment assistance, you're again, people don't care, but the ratios can't be over this. And so it all starts with having that conversation. I had a conversation this morning on people needing a bridge loan because they're going to buy and sell. So there's all sorts of fun stuff that's still out there. and it's still a good time. So we want to have the conversation, and that's what it comes down to. You have to have a conversation.
You have to
with
know where you
people,
stand
know.
so you can move forward. Because
So-
a lot of people think, "Oh, we'll just keep ours. We'll buy the new house. We'll just keep ours,
Right.
and then sell it after we close." And they may not qualify to do that anymore.
Right. So where do you think rates? You're saying at the break, Tom. Give me your insight. You're a flooring guy. Give me your insights on rates because you're probably as accurate as I am.
Well, yeah, no, right. I have all the charts. No, I think it's going to hit 10%.
Okay, Keith.
And what is that? I think we're going to go above 9. I don't think that is done.
You think we're going to be? Okay.
We're going to. I don't know if we'll break through double digits, but we are for. I think we're going to be.
I hope we don't.
Over 9%.
I hope we don't
Yeah.
touch it. What do you think?
There's nothing to stop it now.
I think we're going to slow up right now. This morning, things are leveling out. So I hope it'd be great if we could just level out and start getting that recovery. But everybody telling us says we're going to be in this high 7s to mid 8s for a period of time.
Now the Fed are they going to raise the rate?
They say they're not going to now.
Okay, now they're saying.
So now they're saying they're not going to. So maybe that will help.
Maybe
a little
that'll
bit.
help then. We'll see. This is your Real Estate Chalk Talk with the Hittner Group. 612-627-8000. 612-627-8000. HittnerGroup.com. HITTNER Group. All one word. HittnerGroup.com. And we'll see you next week.
You've been listening to your Real Estate Chalk Talk with the